Yo guys, how you guys doing? Hope you guys are doing good and wonderful. So Israel the trader speaking right here. So in today's video we are going to discuss about risk to reward ratio, and risk to reward ratio is very important when it comes to forex market, right? So as a trader you have to understand what we refer as risk to reward ratio, and once you understand it clearly, of course, if you watch this video to the end, definitely you must understand what we refer as risk reward ratio. So I highly encourage you to watch this video from beginning to the end so that you understand what we refer as risk reward ratio, right? So yeah, what actually risk reward ratio does is actually when you are losing maybe two trades and you are winning one single trade, that one single trade that you are winning can actually cover that your two trade that you lost, right? So actually this happened to me this week, because you already know that I lost two trades and won only one single trade, and that one single trade I actually won covers my losing trade that I lost this very week, right? And of course guys, this video is sponsored by Trader Central. So Trader Central is a prop firm that based in Canada. What they actually do is they fund retail traders with a very huge amount of capital to trade in the forex market, in case if you are a professional trader and fund is your challenge, right? Maybe you are just trading with $50 account or $100 account. So if you use prop firm like Trader Central, they'll fund you with like 5,000, 10,000, 20,000, and Trader Central can fund you up to 200,000 US dollars when you know how to trade in the forex market, right? So yeah, Trader Central is very good. Their support is very responsive. Everything about them is very good. So yeah, actually I use prop firms. Since I use prop firms, and I just came across Trader Central. So Trader Central is a way to go if you are looking out for a prop firm to trade in the forex market. So yeah, without any further ado guys, let's dive into my computer where I'm going to show you this risk reward ratio. And if in case if you want to register with Trader Central, all the links are down in the description of this video. You can check them out and they will give you 30% discount on your first purchase of a challenge, right? Okay, they have challenge, they have instance, they have monthly and different things, you know. Subsequently I will just be updating you guys about Trader Central, so I will make more video in order for you to understand how this Trader Central works. That's it guys, without taking much of your time, let's dive into my computer where I'm going to actually show you risk to reward ratio. Okay guys, so here we go now on my computer where I'm going to show you risk to reward ratio, how to apply it and stuff like that to avoid you being losing money in the forex market, right? So without any further ado, let's start by knowing what is a risk to reward ratio, right? It is very important. So yeah, basically whenever time you see me write RR like this, what I mean is risk to reward ratio. So yeah, there are different type of risk ratio that we can actually go for in the forex market. We have what we refer as 1-to-1 risk to reward ratio. We have 1-to-2 risk to reward ratio. We have 1-to-3 risk to reward ratio, and etc. Right? That's how it goes. So it goes 1-to-1, 1-to-2, 1-to-3, 1-to-4, 1-to-5, 1-to-6, 1-to-7, 1-to-8, 1-to-9, 1-to-10. So it depends on the setup that you are having in the forex market, right? And of course, in this case, we are going to use these three examples in order for us to understand how we can actually apply this risk to reward ratio, right? So just cancel this, because if you go for 1-to-1 risk reward ratio, definitely you are not going to be a profitable trader if you are trading this 1-to-1 risk reward ratio, right? So don't mind, you know, as time goes on, you'll be able to understand what this one stand for and what this one stand for as well, and also what this two stand for and what this three stand for, you know, because that's what will enable you to understand what is actually a risk to reward ratio, right? And of course, you know, this is just a basic of risk management. So I'm trying to like show you the basics so that you'll be able to know how to execute a very good risk management on your account whenever time you are trading in the forex market, right? Very important guys. Okay, without any further ado, let's continue. So yeah, this one stands for our stop loss, which is SL, whereby this stands for our TP, which is what? Take profit, right? So I want to just take my time to kind of teach you some basic of this risk to reward ratio. Very important. Yeah, so yeah, like I said, this one stands for our stop loss and this one stands for our take profit, right? Similar thing goes here. These two stand for our take profit, whereby these three stand for our take profit as well. So that's how the thing goes. So yeah, let's take for example, we just look at a setup, and this on the setup we are seeing that we are going to be risking around 50 pips, you know. So we are going to be risking around 50 pips pips on a particular setup, right? Then what is supposed to be our take profit? Since we are risking 50 pips as our stop loss, then take profit is going to be what? It depends on the setup again as well, right? I just want to give you an example of why I cross this 1-to-1 risk ratio, right? So since we said that this one stands for our stop loss and this particular one stands for our take profit, now we are risking 50 pips. So we are multiplying our stop loss by the pips, right? And of course, this one we are just multiplying it, right? So 50 multiplied by 1, you see that it's still going to give us 50, right? So which means if your stop loss is 50, then your take profit is going to be 50 as well, according to 1-to-1 risk to reward ratio, right? I don't know if you guys are understanding what I'm saying, but this is just the basic of risk management, right? So yeah, we multiply this by 1, and you can see that you risk 50 to still make 50 pips. So that's 1-to-1 risk to reward ratio, right? And of course, if we are risking 50 pips here and we are going for 1-to-2 risk to reward ratio, then you multiply this 50 multiplied by 2 is going to give us 100, right? Because this is our take profit. So what we are doing is stop loss multiplied by the take profit. So if I'm going for 1-to-1 risk ratio, my stop loss is going to be multiplying by take profit, which is 1, right? So that's why we have to multiply the 50 multiplied by 1 to give us 50. So you can see that if you risk 50 pips to make 50 pips, definitely you are not going to be a profitable trader if you actually go for 1-to-1 risk ratio, right? As time goes on, you'll be able to understand what I'm saying, right? So if you go for 1-to-2 risk to reward ratio, you can see your final take profit is 100 pips, right? That's your final take profit. But if you go for 1-to-3 risk to reward ratio and your stop loss is 50 pips, you multiply 50 by 3. So that's going to give you 150 pips. So since it's 150 pips now, you can see with different risk to reward ratio is giving us different profit target and different number of pips to take, right? So, but if you don't take all of this risk to reward ratio very serious, definitely your trading career or trading stuff is not going to go far, right? So it is very important for you to take all this into consideration, right? So what I was basically saying and why I did cancel this 1-to-1 risk to reward ratio is because if you are going for 1-to-1 risk to reward ratio, say you risk 50 pips, let me just give you guys an example, right, before we continue. So I don't want to make this video a very long video, guys. So we'll continue in the next video if I'm not able to cover everything right here in one single video, right? So don't worry, we'll cover everything in the next video. So this is just going to be a part 1 of it. Part 2 is coming, and also if possible we might also make part 3 of this particular video, right? So of course, yeah, let's take for example with 1-to-1 risk ratio now. Say our take profit is 50 and our stop loss is 50 pips, right? So let's take for example that we won 2 trade, which is our final take profit was triggered, right? So here we secured 100 pips, right? Then 3 of our trade now hits stop loss. So which in total we took about 5 trade, right? So we took about 5 trade in total. So you can see if you do it like this, then 2 take profit hit and 3 stop loss hit, you know, we minus 150 pips here. So you can see that you are still negative 50 pips overall, right? So you can see that it's not still profitable until when you win like 3 trade and lost only 2 before you now are positive 50 pips, right? So of course you can see that it's not still that much profitable. But let's go for an example with this 1-to-2 risk ratio. I don't want to waste much of your time. That's why I'm just giving one examples and stuff like that. So say we took about 5 trade in total, then 2 of our trade hit take profit. So now this time around we are going to be making 100 pips here instead of that 50, right? Because this is 1-to-2 risk ratio, right? We multiply our stop loss by the reward ratio, right? So 2 take profit hit, then each is 100 pips, and here we secured 200 pips, right? Then here let's say we lost 3 pips, 3 trade, hit stop loss, and the stop loss was 50 pips, right? So 50 multiplied by 3 is 150. So you can see now we are minus 150 here. Then definitely if you minus 150 from 200, you can see that we are still up 50 pips, right? You can see that we are up 50 pips. But the previous one, which was 1-to-1 risk to reward ratio, we took about 5 trades in total. 2 was our take profit hit. Then we were negative 50 pips after 3 stop loss was triggered as well, right? So this is just a crash course of risk management, guys. So this is part 1 of this video. Expect part 2 to come out maybe tomorrow or next tomorrow. We'll continue from there and we'll take out from 1 to 3 risk reward ratio, and I will give you enough examples so that you'll be able to understand what I mean by all of these things, guys. So yeah, once more again, this is Israel the Trader. Thank you very much for watching. I will see you in the next video, which is going to be the part 2 and part 3 of this very similar topic, right? And of course, if you are not yet subscribed to the channel, subscribe to the channel and also give this video a thumbs up, share with your friends and family, and let me know down in the comment section what is your opinion on this particular video. If you want us to continue, you can just suggest any particular video down in the comment section. So once more again, thank you very much. I will see you in our next video.